Risks in both a Fed pause and a rate hike. So what are we expecting?
Well, we're expecting the Fed to wrap up the second day of its two-day meeting and Jay Powell to come out and explain what they have done. Communication is going to be very important in this decision, no matter whether they decide to hold off, watch the landscape, see if the steps that have been taken that have calmed the market, have allowed all those things to happen in equities and bonds that Emily was just outlining, or if they decide to go do the hike. That's the other side of it. Now, markets, I think, it looks like, the Credit Suisse UBS deal seemed to do a lot to make people think, well, maybe they can do this rate hike. The 20 basis point rate hike means they almost are leaning for sure for the 25, but not quite. But definitely that's where people are leaning now. The dot plot, how are they going to do the dot plot, right? We're uncertain about where the markets are going. We're uncertain about if this financial banking turmoil is over or not, but they're going to have to put dots out. There was once during the pandemic where they didn't put out dots, and the concern is if they don't do that, once again, that's the kind of step and make people think, ooh, the Fed's really worried. So it's not telling us where it thinks its rate hikes are going this year. Right now, the terminal rate is seen about 25 to 50 basis points higher than it is now. 4 3/4 is the funds rate. That would take it up to about what, just over like 5 1/4. And the consensus dot has been 5.1. But just think what we were talking about the last couple of months. Oh, maybe it'll be 5.4. Maybe it'll be 5.5. Maybe the funds rate will have to go to 6. But we know, look at this chart. Financial conditions are tightening. Do you have to raise rates as much if financial conditions are going to do some of the work for you? However, if this does settle down, if investors, if depositors are willing to keep their money in their banks, well, then maybe this will ease up a bit. But for now, it certainly signals that caution is warranted. Bill Dudley, former New York Fed president, who had said yesterday in an op-ed that he thought the Fed should pause. Today he's saying what the ECB said, European Central Bank, when they did a 50 basis point rate hike with its inflation rate still very high. You can do both at once. You can try to maintain stability in the financial markets. You can take whatever steps and use whatever tools you need there. And at the same time, you can use your monetary, your inflation fighting tools to bring down inflation. And I think as the markets seem calmer, the investors, economists seem more on board with the idea that it will be a dovish hike. And there'll be a lot of explaining from Jay Powell, but that seems to be the sense of what is most likely right now. But we'll know, we'll be talking tomorrow about whether it was or it wasn't, right, Sherry?